Hi everyone, we're at Kerner Capital Partners, here to talk to you today about our market-neutral hedge fund. I'm Isaac Fox, a senior studying economics at Purdue University. In my past, I've worked for market research firms such as Nielsen in Chicago, and that's where I'll be doing my full-time work. My primary interests are in behavioral finance and behavioral economics.
Thanks, Isaac. My name is Raghav. I did my engineering from India and majored in economics. Post this, I started working for an investment bank. I was working as an equity research analyst. My role involved calculating VWAP prices for all the stocks covered by Nomura. I also wrote algorithms to calculate alpha and manage a system famously known as trading ideas. Later down the line, I devised a logic to help traders to set up their portfolio on the Bloomberg terminal. Independently, I also started pursuing my CQA charter to build on my financial acumen and fundamentals. To gain some practical and global exposure, I came here to Purdue to pursue my master's in finance degree. Over to Ishan.
Hi everyone, my name is Ishan and I'm a Master in Finance candidate at Purdue. I did my undergrad in Computer Science and Engineering from India. Post my undergrad, I joined a proprietary trading firm as a derivatives trader in India. My role as a derivatives trader included doing extensive research on future contracts based on Chicago Board of Trade using Bloomberg and Reuters terminals, and then executing trading decisions on Chicago Board of Trade. Simultaneously, I kept working for my CFA and I'm a level 3 candidate right now. And after leaving my job, I joined Master in Finance program at Purdue. So passing it over to Johnny.
Hi, my name is Johnny Shen and I'm from Silicon Valley, California. I'm currently an undergraduate sophomore majoring in finance. This past summer, I interned with an investment holding company in Taipei, Taiwan as a buy-side analyst where I worked on foreign exchange and equity exotic options, as well as a couple of acquisition deals. I hope to obtain my CFA by the end of next year.
Thanks, Johnny. Hi, my name is Paul Griggs. I'm from Charlotte, North Carolina, and I came to Purdue to study economics and finance and play football. This past summer, I was a credit risk analyst intern with Lafayette Community Bank, and I also this past semester started an investment firm with Johnny and Isaac.
Here at Kerner Capital Partners, our investment philosophy is simple. We want to take advantage of mispricings in the market that we believe occur due to an overreaction to news and specific information. Now, we've been inspired by great researchers such as Paul Neal and the Nobel-winning Daniel Kahneman, and their works as to how effective simple algorithms are compared to industry experts. And what we've found is that really oftentimes a simple algorithm wins. So what we've done is develop these for each industry that we cover in order to try to find fundamentally and technically sound companies to invest in. Now, we're constantly working to refine, innovate, and redesign these so that we can achieve the maximum returns possible for our clients. And in the end, what we want to do is offer a market-neutral investment vehicle for our clients that gives consistent returns on an annualized basis and provides a piece of stability in your portfolio. So now I'll pass it on to Paul to talk about how we construct this portfolio.
Thanks, Isaac. Now we'll discuss our portfolio construction process. We use industry-specific factors, both fundamental and technical, such as PEG, price to earnings, and simple moving average, to screen stocks in each sector. We follow the financial, industrial, energy, healthcare, utilities, telecom, consumer discretionary, cyclical, and technology sectors. We have each member follow 2 sectors, and by dividing up the sectors, it makes it easier for each member to understand the factors that are important and affect the companies in that industry. This allows them to know which factors are important when considering investment decisions, and it also helps them when they're refining their algorithms to help us pick better stocks down the road. We update the portfolio on a monthly basis using our sector-specific algorithms. However, in certain months, such as January, we use our discretion to deviate from the strategy a little bit. And Raghav will talk more about this in our discussion of risk and return expectations. So when we rebalance the portfolio, we use the investment algorithms to come up with twice as many stocks as we have positions available in our portfolio. And then we get together as a group and use a little common sense to pick the stocks that we think are going to have the best return over the coming month. So with that, I'll pass it to Raghav to talk about risk and return expectations.
Thanks, Paul. We have maintained a market-neutral portfolio and tried to mitigate our risk by diversifying our portfolio by covering all the sectors. Our goal is to achieve an annualized return of T-bills plus 3%, as it is a common measure in a standard industry. We have been able to beat our benchmark since the past 2 months while keeping a low beta of 0.1. Looking forward to high interest rates and strong macroeconomic headwinds, we believe that we will outperform the benchmark in future. Heading forward into the month of January, we plan to step away from momentum and leave it up on small caps to capitalize due to January effect. Now Ishan will walk you through the portfolio attribution.
So how can you expect us to perform better than a benchmark? We attribute the better performance of our portfolio to two factors. One is our stock selection ability, and second is our sector timing ability. Regarding our stock selection ability, we are not just trying to mimic the market portfolio, but we are trying to find the stocks which we think are going to perform better than the market itself. And for that, we are using our own investment algorithms, as Paul mentioned. Regarding our sector timing ability, we keep track of all the macroeconomic events which are happening in the world, and we try to capitalize on that. For example, there's much going on in the energy sector these days. So we make use of that fact and lever up our portfolio in that particular sector. Now, Johnny will tell you more about our plans for the coming months.
Here at Credit Capital Partners, we strive to explore market inconsistencies and utilize factors that we find most useful to provide value for our investors. We have outperformed many of our peers in this industry. However, as a forward-looking company in a fast-paced environment, we have always resolved to innovation as one of our most important strategies, to see value before others and to create wealth for our investors. Recently, after our internal strategies evaluation, we find that in order to effectively implement our market-neutral strategy, we needed to weight our portfolio for long and short to hedge any market and firm-wide risks that we may foresee. We want to provide our clients with great and consistent returns through proven methods. Therefore, ladies and gentlemen, don't miss the bus. Invest in us at Credit Capital.